Okay, good morning and welcome to Establishing and Monitoring Internal Controls. Thank you for joining us today. I'm Lisa Denholm, an audit director here at Sikich, and we also have Katie Mays, who is a manager. We are both part of a larger team who specialize in the not-for-profit industry. We host webinars like these several times a year on topics that are pertinent to the nonprofit industry. If this is your first time joining us, welcome. Sikich is a professional services firm supporting not-for-profit organizations through our audit, tax, accounting, advisory, and technology solutions. We are more than just a CPA firm with an award-winning technology practice and advisory practice. Our team serves a variety of not-for-profit organizations, including higher education institutions, social service agencies, healthcare organizations, foundations, and more. We do have team members and clients across the US, and we enjoy being able to connect with you all virtually. Before we jump in today, I have a few brief housekeeping items. I do encourage you all to use the questions feature. We will be monitoring for questions throughout the presentation. We'll save a few minutes at the end to cover any questions that we do have time for. If your question happens to not get answered before the presentation is over, we will follow up afterwards. The slides are also available to you for download, and the session is available for CPE credits. So polling questions will launch throughout the webinar. These will need to be answered in order to get credit for this presentation. Also, at the conclusion, we will have a short survey that will launch, and you'll need to complete this evaluation to receive CPE credit. With that, the certificates will then be emailed about 2 weeks after the program. With that, let's meet our presenters. So I'm happy to introduce my fellow colleagues, Steve Randall and Sargon Umara, partners at Sikich, who lead our Sikich Governance, Risk, and Compliance Services Group. With that, Sargon, I'll turn it over to you.
Good morning. Thank you all for attending. My name is Sargon Umara. I'm one of the partners in the GRC group and internal audit. I'm a CPA with over 30 years of experience split between internal audit and external audit. And in the past 22 years, my focus has been solely on the internal audit and internal control side. And according to my bio, I guess I know a little bit about Sarbanes-Oxley. I'll turn it over to Steve to introduce himself as well.
Well, good morning, everybody. And Sargon is humble. He knows a lot about Sarbanes-Oxley and internal controls over financial reporting. One of the best in the business. But good morning. Thanks for joining us as Sargon already welcomed you. My name is Steve Randall, and I'm a partner with Sikich, and together with Sargon, we lead the governance, risk, and compliance practice for the firm. Excuse me. I live in Chicago, but I was born and raised in Toledo, Ohio, and graduated from The Ohio State University. Based on a quick glance at the registration list, I'm going to assume there's a couple other Buckeyes here, so go Bucks. Before joining Sikich with Sargon, we were the managing partners of a company called Vanya Global. Vanya Global was a consulting firm specialized in internal control consulting and assisting companies with risk management, compliance, and internal audit. On January 1st of this year, Vanya Global was acquired by Sikich, so now we're able to assist a broader spectrum of organizations like yours. As with Sargon, I've been doing this for a very long time, and we look forward to the conversation this morning. This page is a legal disclaimer our attorneys want us to include. So what it essentially says, if you make decisions based on what I'm about to say without consulting me first and something goes wrong, you can't blame me, it's on you. But on the flip side, I hope that there are quite a few things that you can take away from this presentation and immediately apply to your organization to add value. Information is constantly flowing in and out of your organization, am I right? With that information, your employees or maybe volunteers are handling and processing it on a continual basis. In addition to information, money is also flowing in and out of your organization, and similarly, your employees or volunteers are processing and accounting for those funds on a regular basis. So the question I have for you and what I want you to consider this morning is, what is your organization doing to protect and secure the flow of information, the flow of funds? It's a rhetorical question for now, so don't raise your hand just yet. If you do have questions, please post them in the comments though. But this is a question I believe you should be thinking about. And if you've been thinking about it, my hope is that it hasn't been keeping you up at night. This morning, we're going to tell stories about mitigating risk and hopefully present some ideas for you to consider. And since we're going to be telling stories, every good suspense story has an evil villain, a victim, and a hero. So we'll try to weave a little suspense in our stories and include scary villains, unsuspecting victims, and heroes to come in and save the day. In doing so, we're specifically going to discuss the 5 primary topics that you see on this agenda. Why CEOs, CFOs, and board members are essential to the governance process, how risk management of the financial and IT function is important for every size organization. We're going to talk about some common internal control deficiencies and their remediation, which in our case here are the villains and the victims. And then strategies to mitigate risk, which enter the hero. And lastly, we're going to talk about ongoing management and monitoring of your internal controls. We'll have some polling questions throughout the presentation, which brings us to our polling question number 1. You're required to answer these so you can get your continuing professional education credits. Easy for me to say. And the first one talks about the basis of good governance, which is your set of policies and procedures.
Yep, so everyone should see on their screens now the question. Go ahead and answer. If you have policies and procedures, when was the last time they were updated? Within the last year, within the last 3 years, within the last 5 years, a long time ago, or never? We don't have documented policies and procedures. We'll give everyone just a minute to answer here, and the results will pop up here shortly. Okay.
Well, that's pretty good.
Yeah.
50% within the past year is a good start. We work with quite a few publicly traded companies when we're dealing with Sarbanes-Oxley. And I can tell you in all honesty that they may not always update their policies and procedures on an annual basis. So to see that type of polling is great to see. I didn't see the bottom end to see if anybody had no policies and procedures. Does that poll up? Oh, okay, so we have a few that have not done it or haven't done it in the past few years. Policies and procedures are important. They really dictate what the organization wants to be done and how it should be done, and it provides that guidance to all the employees. So these are valuable tools and governance and risk management strategies that help to define the roles for individuals, to help define what they do and how they do it, and to ensure that what they're doing is aligned with you, the leaders of the organization. So if you're in that grouping of the 9, 6, and 2% that haven't done anything associated with your policies and procedures or don't have any, I would absolutely encourage you to at least get started on them and make an effort, even if it's doing a policy per quarter and just building up on your policies and procedures.
Well, thanks, Sargon. I'm glad you talked about that because I actually couldn't see the result, but my math, you said 9, 6, and 2, that equals 17. So 83% of the audience has updated their policies and procedures within the last 3 years. It's fantastic. If that's the case, maybe we can just skip through to the end. No, let's not do that. On to topic number 1, why CEOs, CFOs, and board members are essential to the governance process. I'm going to spend some time on this slide because leadership sets the tone for the organization to promote and foster an ethical and responsible culture. Based on what you answered in the first polling question, most of you already know this is called tone at the top. Leadership not only has to set the tone by what they say, they have to reinforce the tone by what they do. I want to talk a little bit about each role. Some of what I'm about to say may be self-evident, but I want to create the baseline for today. So let's start with the board. The board is fundamental in promoting good corporate governance, and I've got 4 specific reasons. Number 1, they provide independent and objective judgment, ensuring leadership acts in the best interest of the organization, its mission, and its stakeholders. Number 2, through the diversity of the board member experience, they have a collective wisdom to help shape strategy and ensure it aligns with the organization's mission, vision, and values. Number 3, the board should assess and monitor financial, operational, legal, and reputational risks to safeguard the organization's interests. And lastly, number 4, the board sets or helps sets and enforce ethical standards. So that's the board relative to governance. How about the CEO? The CEO or managing director or whatever the title that person has for you is responsible for setting the overall direction and strategy of the organization. And obviously, they're accountable for your organization's performance. They should be working closely with the board to establish ethical guidelines, risk management frameworks, and compliance programs. The CEO also serves as the face of your organization, representing your values and vision to the external stakeholders. Ultimately, the CEO's role in corporate governance is to balance interests of the various stakeholders, drive performance, and uphold ethical behavior and ethical standards. Lastly, the CFO is responsible for the financial management of the organization and plays a critical role in identifying and managing financial risk, which means they're responsible for establishing a robust financial controls and control systems to safeguard assets and mitigate the risk of financial mismanagement and fraud. The CFO ensures compliance with financial regulations and reporting obligations. And the CFO develops the financial strategy and objectives to provide financial insights, forecasts, and analysis that guide the strategic decisions your organization is making. All this to say, leadership sets a tone for your organization, not just by what they say, but more importantly, by what they do. Their responsibility for governance drives the stories we're about to share. Sometimes people in leadership unfortunately fill the role of a villain. There are other sad stories where they've been the victim, but the best stories, the most fun stories, are where they've served as the hero. And everybody loves a hero, right? I mean, who really doesn't? But if it were only that easy, sometimes it may seem as if you're pushing a boulder up a never-ending hill, as this image shows. You can have the greatest ideas, the biggest ambitions, but if you don't have the resources, it's nearly impossible to execute. And if you're like most not-for-profits I've worked for or worked with, resources are not unlimited. You likely can't allocate adequate funds to instantly make your vision a reality. You're likely relying on dated technology, which is accumulating technology debt, resulting in overly manual processes. As far as internal controls go, you're probably great at rallying around a problem, but too many times a problem could have or should have been avoided if someone would have just done the right thing at the right time. We're not in the firefighting business unless, of course, you're actually in the firefighting business. Putting out little fires everywhere or one big fire distracts you from your mission, and conducting triage in operations is time-consuming, wasting valuable resources that could be used to support your mission. Even with these challenges, and maybe because of them, your role in governance is critical. Because if you don't take that responsibility serious, the results could be horrendous. In our stories, the items listed here on this page represent the villains. And as with all villains, they're kind of scary, right? You can't afford a 6 or 7 figure wire fraud. A little bit later, I'm going to try to discuss this if we have time. Wire fraud schemes are happening every day. You also can't afford a security breach. Villains are attacking 24/7. And it unfortunately isn't a matter of if you're going to be targeted, it's just a matter of when, if you haven't already. And with that target, you better have really good backup and recovery capabilities because you can't afford to be held hostage by ransomware. And if you're storing confidential data, you can't afford a leak of PII. You can't afford to be shut down because of a disaster, an accident, or an act of God, or COVID. And some of the services you provide are even more important when there's one of those things is happening. You can't afford the loss of resources or funds due to mistakes, theft, or fraud. And you can't afford accounting errors to impact your funding sources or regulatory responsibilities. No matter how well intentioned you are, villains strike every day. These are all recent examples I pulled from Google, all impacting not-for-profits or charities. Unfortunately, these are not the only example. This slide could have gone on for a long time, but for the sake of time, I limited it to what you see here. Sargon's been sitting patiently for a long time after that polling question, so let's give him a chance to speak. Sargon?
So you heard Steve define what your roles, and I think that your role is important in the governance and enterprise risk management strategies. So we believe that it really starts with you, the leaders, the board members of the organization. You're the ones that the employees look to and follow, and you're the ones that set the tone at the top. You're the ones that define what really is acceptable behavior by individuals. Not only do you have the authority to hold people accountable, but you're responsible, as Steve mentioned, for the organization's performance financially, morally, and ethically. So for governance to work, for risk management strategies to work, it has to include you, and you must be part of that. Turn it over to Steve for responsibilities.
Sorry, I was having technical difficulties pushing my mouse. On an earlier slide, I talked about the general responsibilities of the board, the CEO, and the CFO. Sargon just went through some additional responsibilities. We thought we'd reinforce that with this slide. Governance is everyone's responsibility, not just leader, but everyone has a hand in it. You need to ensure socially responsible and ethical behavior of your organization and your employees and volunteers. You need to implement appropriate systems and procedures to mitigate risk. You need to ensure the integrity of internal controls, technology, information systems, and financial reporting. You need to ensure disclosure controls and procedures that are compliant with all relevant laws and regulations. You ensure compliance with all applicable legal and regulatory requirements. You need to ensure the principal business risks are identified and managed. Now, reading through that and hearing what we've said, I realize this could seem like a tall task. A few of you may be thinking, yep, someone has to do it, but it isn't me. I'm here to say it is you, and it is everyone you work with, be they employees collecting a salary or volunteers who are doing it because they believe in your mission. Because a breakdown in any one of these could spell doom for your organization. Let's take care of our governance responsibilities so that when your organization makes the news, it's because of all the good deeds you do and the mission you serve and the value you create. With that, let's go on to our next polling question. So jump back in and get ready to answer a question. The next polling question dovetails quite nicely with what we're talking about.
Yep, so everyone should see on the screen, how do you describe the maturity of your risk management program? We have optimized, effective, developing with room for improvement, initial stages, or none. So just give everyone a few 30 seconds or so to answer there. Okay, there are the results.
Okay. It'd be interesting to see from the group that's optimized what they're doing. but it definitely looks like there's some that have some room for improvement and others that feel that they're doing a pretty good job related to it. So that's great to hear. I will say that a lot of organizations, you'll hear us talk about the 3 lines of defense related to risk management. And I think most organizations feel comfortable with their first line of defense, the employees. Some may even feel comfortable related to their second line of defense, just other groups that are managing risk. And it's a lot of organizations, especially in the private or not-for-profit, may not feel as comfortable with the third line of defense related to independent assurance of the control environment. But it looks like in this case that we have a solid group that is performing pretty nicely related to that. Good to see.
Yeah, and that maybe there's an idea or option to pull this group together and maybe have a roundtable and best practices session to share ideas and what we have going on.
Yeah.
All right, I'll advance it. So this is back to you, Sargon.
Yeah. So I believe all organizations, large, small, private, not-for-profit, have risk management strategies. They just may not necessarily be in the most formal manner. Some of them may be informal, and some of them are just more developed than others. As we kind of go through this, the questions that I would want you to ask yourself are, what are your risk management strategies? Are they enough to identify and mitigate risks? And are those strategies designed and operating effectively? If it's just based upon the fact that you've designed and developed them and trust the individuals that are performing them, there's many stories where that trust has failed, and you may want to consider that you test those risk management strategies to ensure that they're appropriate and operating as you see fit. So if you don't have formal risk management strategies or even any form of risk management strategies, what can happen? Frauds. You saw Steve pull up a website or a slide that showed various different headlines of frauds that occurred throughout the past few years. If you consider public companies and what happened with Sarbanes-Oxley, Enron, WorldCom, it happens to the big organizations as well. So if you do have formal risk management strategies, great. Then you're effectively improving your chances in being able to identify any risks that may be coming up related to your organization. Most organizations employ what I mentioned already, the 3 lines of defense model. But to be honest, in my opinion, I think it's 4 lines of defense. You've heard the theme of the day today, and I think it includes you. And Steve, if you can jump to the next slide, please. So when we're talking about the 3 lines of defense, I reference cybersecurity. Many of you are familiar with how cybersecurity defense works. There's layers. The more layers, the more difficult it is for a hacker to get into your network and systems. And the 3 lines of defense model is the same thing, creating different layers to strengthen your risk management strategies in your control environment. And depending on your size, complexity, and staffing, you may have stronger first lines of defense and possibly less so on the second and third lines. Or in some smaller organizations, perhaps the first and second line are done by people that are wearing multiple hats with multiple responsibilities. And there's very little difference really between the first and second line specifically. Let's talk a little bit more in detail related to each one of these. So if you can change to the next slide, Steve. Okay. So I mentioned that I believe that there's really 4 lines of defense, and that first line truly is you, the board, the leadership of the organization. That you are critical. If it's not important to you, then it likely won't get done. If risk management is important to you, then it will get prioritized. So from that perspective, I believe that you are the first line of defense. Okay, now we can kind of delve into each one a little bit more detailed. So Steve, if you can get into the next slide. Okay. The first line of defense is your employees and what they're doing as their job. Effectively, they're following, hopefully, documented, established policies and procedures, or at a minimum, they're following procedures that they have been taught on the job related to what they need to accomplish. In this first line of defense is where you will see most of the risks identified and captured related to the business. And ultimately, it's these individuals that, as they see things, talk through things with their supervisors, that they're able to identify and hopefully mitigate. But to help your employees, it's not enough just to throw somebody on a job and just say, go do it. You've heard us mention policies and procedures, but let me start with a different section. First, I think you need to segregate of roles, meaning that you can't have one individual have too much opportunity and authority to be able to perpetrate a fraud. So the more that you're able to segregate roles, that allows for better protection of the organization. If you have then policies and procedures, whether defined or informal, preferably on the defined, that helps guide these employees in their job and how they're supposed to do it. It also, again, aligns what they're doing with prescribed, approved procedures that are in line with the organization's goals and objectives. And then included within those policies and procedures or elsewhere, maybe internal controls. Those internal controls, when you design and define them, also protect the organization. If we have weaknesses or cracks in this first line of defense, this is, it becomes harder to catch. So there's increased chance of fraud and, risks that you're not aware of coming to fruition and causing a bigger issue than it needs to be.
So before we move on, Sargon, I just wanted to add in that a lot of organizations we work with really struggle with segregation of duties. They have a very lean staff and have a difficult time pulling duties away. However, there are a variety of risk mitigation strategies that you can employ even with a lean staff. And I think we're going to talk a little bit about some of those later on when we're going through examples.
For segregation of duties, I think you have to be creative with the staff that you have. We understand and appreciate the fact that budgets matter, staffing matters, and it's not very simple to just have an open checkbook to say I'm going to have segregate duties perfectly in every single organization. But again, creativity matters, and where creativity does not necessarily work or can't work, you implement detective type of controls that will help to monitor where segregation cannot be fulfilled.
Yeah, so it's not just reducing the risk of fraud, it's reducing the risk of errors and whatnot. Moving on to the second line, see if I can, there we go.
Okay. So the second line of defense, as mentioned earlier, could be the same individuals that are actually in the first line of defense. For lean organizations, that may be the case. In other organizations, this may be just other functions or groups, and that's okay too. Whether you have a full ERN group or you just regularly sit with your teams to discuss risks and how to mitigate them, it's important that it's being done. So it's not a matter of you have a full functioning department or just you guys sitting around a table and saying, hey, what are our risks? What should we be considering in this coming year, and how do we address it? That's a mitigation strategy that could be applied for smaller organizations. For other risks, when we're talking about the second line of defense, you're talking about, in some cases, outsourced risk mitigation. You may have outside counsel. You could also have an insurance broker for purposes of any insurable risks. But identifying, understanding, and then applying a mitigation strategy is important. And if you're not in the process of identifying those risks, you will not be able to determine how to remediate it or apply a risk mitigation strategy to it. So when we talk about this second line of defense, a simple way is identify the risks, understand them, and then, however you do it, again, whether that's through a separate department, whether that's you sitting with your team to discuss risks, or whether you hire Sikich to do a risk assessment and identify those risks. In each case, it's important for purposes of identification first, before, and then determining what risk mitigation strategy makes sense. Similarly, in this, it's no different than from an first line of defense when your employees are working through the operations of the business. If risks are not identified or you have weaknesses in this second line of defense, then the chances of those risks occurring or you being unprepared for unidentified risks just increase.
Yeah, it's not just enough to do things. It's you have to have critical thought as you're doing them. An example, again, talking about examples later, but in this specific case where for a second line of defense to try to mitigate cybersecurity risks, an organization got cybersecurity or cyber insurance. They thought they were protected. What they failed to realize is that their IT department wasn't routinely backing up their data. So when they did have a breach, cybersecurity insurance paid them for part of their loss, but it couldn't reimburse them for the fact that they couldn't restore all the data that they had. And they had to report out to clients and employees the data that was stolen. And it was extremely painful. So had they thought more holistically, yes, we're going to have a cybersecurity insurance, we also need to have adequate backup and recovery capabilities.
Okay. I think in most private and not-for-profit organizations, this is the most neglected line of defense. And I will call it just independent assurance. Whether you have an internal audit department or not, it's any form of independent audit insurance. The third line of defense establishes the accountability. When we're doing internal audits or are the internal audit for other organizations, we're conducting risk assessments. We're actually looking at the design of internal controls and testing the operating effectiveness of those controls. But we don't rely upon the fact that they may have been done and trust the individuals that are doing it. We trust, but we verify. So unfortunately, most smaller not-for-profits do not have a third line of defense. But I believe that they can benefit equally, if not more, than just some of the larger organizations just by doing periodic general internal controls reviews. We've done that for several organizations where we come in, look at controls over a wide range of processes, and give them our assessment related to the internal controls design and whether they're operating as they were intended. That gives some assurance to the board, gives assurance to the leadership, and establishes that accountability that is important so that individuals know that someone is going to come in and take a look to ensure that everything is done appropriately. If you don't have a third line of defense, then how do you really know that what you've designed is actually appropriate? And if there were changes in systems, people, processes, what happens in that design? Sometimes, if not documented in policies and procedures, that design morphs and it's no longer what you had created. And then lastly, how do you know that it's actually operating as you intended? Unless your oversight procedures are looking at every control, there's potential risk that controls may not be working.
Yeah, just interjecting quick, trust but verify. Going back to the example I used before, there was trust that the IT function was adequately backing up the data, but there was not any verification to make sure they were doing that. So trust but verify. Sargon, when there's situations that arise like the one I mentioned, like other ones we've seen, oftentimes I hear someone say, gosh, I thought our external auditors were doing that. How would you respond to this group if someone there is saying, well, doesn't my accounting firm do this for me?
No, they don't. So for most external audits, and we have some external audit individuals on this, they can speak to it probably more intelligently, but they gain an understanding of the process. At the end of the day, they are performing substantive procedures to validate the numbers. They are not necessarily looking at the control environment or your risk management strategies. They may feel comfortable within materiality related to that, but let's take materiality out of the picture for a second. If there was a fraud or if there was a cyber attack, that impacts reputation, at which point those are not things that are being audited by the external auditors, and it would be very difficult for them to capture anything associated with that. If you do have a fraud and that comes out and you're waiting on contributions, perhaps individuals will no longer contribute. So there's a lot of risks that we look at that are not part of an external audit. And again, an external audit is not looking at the controls that you've designed. They're looking at the numbers that you are reporting.
Thanks, I think that helps. So I've seen some questions come through the audience. Hopefully we'll have time to get to those in the end. We're gonna continue through the presentation so we get all the material covered. We're gonna jump into, I've already given a couple examples of internal control deficiencies and the remediation, but this is the villains out there and the victims. But before we start, let's talk about internal controls. Let's get a definition out there. The Institute of Internal Auditors is the governing body for my profession, internal audit. They're kind of like what the AICPA is to accountants, but exclusively dedicated to internal audit. The IA sets the standards that all internal auditors should conform to, and in doing so, the IA created a definition of internal control. Internal controls are the policies and procedures implemented by your organization to ensure financial reports are reliable, operations are efficient, and activities are compliant with applicable laws and regulations. Internal controls are essential to good governance. They should be documented in procedures understood by employees and reviewed by management and the board. And then, as Sargon said, with the third line, tested to make sure that they're effective. So Sargon and I are sitting in Illinois. I actually live down the street from DePaul University. I'm assuming most of you have heard of DePaul University. They had a heyday in basketball back a long time ago, 40 years ago. One of the accounting professors at DePaul is named as Kelly Richmond Pope. Kelly produced a documentary recently called All the Queen's Horses. If you've not heard of it, I encourage you to look it up. It's about 60 minutes or so. Again, it's called All the Queen's Horses. It's a story of a small town in Illinois, Dixon, Illinois, which also happens to be Ronald Reagan's birthplace. So that was their original claim to fame. Unfortunately, they're famous for another reason now. Dixon was the victim of the largest municipal fraud in the US history. The villain who perpetrated fraud was a long-standing trusted employee. The hero, a soft-spoken, loyal employee who simply asked one question. To know what that question was, I'm going to, suggest you go watch the documentary. Kelly Richmond Pope also has a book she recently published, and I'm about halfway through it. But anyway, the Dixon story is quite a story. Again, it's called All the Queen's Horses for those that are interested. And quotes on this page are quotes that we hear all the time after an incident.
Most of the time when we get, we work with some private equity organizations that deal with, they're private organizations. They're not not-for-profits, but they're private organizations. We have never been called in to work with a private equity organization other than after a fraud has occurred. At no point have they brought us in to do an assessment of their internal controls, because at that point in time, they're focused on just operations, trying to make sure that they're improving their financial numbers. And at no point have we been ever brought in again until after a fraud has occurred, at which point then we're being, then we're their favorite individual to come in and evaluate everything that's happening.
And consistent with what I was just saying, at that time, the horse has already left the barn. So again, that documented All the Queen's Horses. And it's time for our next polling question. So jump back on. I believe it was shared. Maybe
Yep, it's up there now. How confident are you in your internal control environment? I'm extremely confident. I sleep well at night. Confident, but sometimes I have restless sleep. Moderately concerned, I sleep with one eye open. Or extremely concerned, sleep, what sleep, or no opinion. Give everyone just a couple seconds here to answer.
As we're putting together these slides, I was thinking we should have some background music playing. I won't sing it, but I have one song in mind. Goes with number or letter C.
Okay, there's the results. So kind of mixed.
Okay. It'd be interesting to understand from the ones that are confident to see if they actually have all three lines of defense, or how they feel comfortable related to that. It's good to see that individual or organizations feel comfortable related to the internal control environment, though. So that's good. Well, let's talk a little bit about some of the common deficiencies that we see. And Steve, I think you can get to that slide.
Am I not on it? Hello?
No, I think we just see we don't see the full presentation.
We just see the front. Yeah, we just see the first page.
Well, what happened?
We've lost it.
Well, while Steve is trying to figure out the technical difficulties, I can jump in. So
are we back up?
No.
Not yet.
Huh.
Steve, can you try unsharing and reshare?
I'm gonna do that, yeah. How about now?
It adds your notes.
Oh, it does. Awesome. Let's do. You just read my notes and not have to just. All right. Is that no? It's still doing the same thing.
Yeah.
I apologize, everybody. How about now?
Same.
Come on. What did I touch?
Well, let's start with the
Go ahead.
first one while Steve tries to figure out the technical difficulties. One of the best ways to protect yourself is also one of the most common deficiencies that we see, which is segregation of duties. No single person should have complete access without another person being involved, and that's very important. Steve, that's better. It's just on the second page. So if for organizations that are publicly traded to organizations that are small and light staffed, segregation of duties is an issue that we see frequently when we're doing audits. And organizations should work diligently in trying to make sure that they separate duties and commensurate with those duties, provide the appropriate system of access. Another common deficiency is account reconciliations. This one is got a special place in my heart, specifically, but I'll talk a little bit about that. Most organizations hopefully are performing reconciliations in a timely manner, and that they're investigating aged transactions, large or unusual transactions and differences, and independently performing reviews. There was a case, well, within the past few years, we had a client, a publicly traded organization that acquired a company in Canada. We went out there when the organization was acquired, and we were told, hey, it's a quick kick the tires, take a look at the documentation that they've put forth, and we think that they're going to be great and everything is perfect. We took a look at some of the reconciliations, specifically the cash and the accounts receivable, at least for purposes of this conversation, and we started seeing some oddities. In the cash, there were significant outstanding items, aged outstanding items from 6 years back that, according to when we started really delving into it, that were not being looked at. These are in the tens of millions of dollars. When we looked at the AR aging and the reconciliation related to that, they had unapplied cash. They were receiving cash. They just were not applying it to a specific invoice or at times to even a specific customer. And these were also in the tens of millions of dollars and dating back as far as 6 years. So when we started looking at this and presented it to the external auditors, needless to say, this, along with a variety of other things, created material weaknesses in their controls for this organization. It's just that important. The account reconciliations are a control to monitor and hopefully catch any of these items that are happening, and they may be indicative of breakdowns in your processes. In this case, they really had some breakdowns in their collection and application processes related to cash. Similarly, you want to, for purposes of cash, you want to segregate duties. You want to make sure that you're annually reviewing the banking authorities. In the case where Steve mentioned associated with Dixon, and not to not to give away the whole story, but ultimately the individual that was the perpetrator in this set up new bank accounts that were in the city's name and in her name, allowing her to cash checks and then to also transfer funds as she saw fit. She held various parties and paid for them with city funds. So it's making sure that we have tight controls over cash and that it's not within one individual's purview is critical.
Yeah. There's a question asked about controls over volunteers handling cash, and if it's physical cash, your risk goes up exponentially, but also from a materiality perspective, it's much lower because typically someone's not giving you $100,000 in a briefcase, it would be with a check. Sorry.
No, but if an individual is willing to take $1, what makes you believe that they won't take $100 or $1,000 when the opportunity is presented to them? Controls, again, that when we talk about risk management strategies, there are layers, there's controls, and you build upon each other. And if we don't have those and we give the opportunity, that's when fraud occurs. Vendor setup and payments, these are just another area that we see many deficiencies in that area as well.
So I've heard, I was gonna say, I've heard 8 stories over the past couple of weeks, literally 8 stories where organizations have been victimized by a payment fraud scheme that's going around. In multiple cases, it was the vendor that was hacked and sent new banking information for payments. In some stories, the verification procedures were not existent. In other, verification procedures were in place, they just weren't followed. In a specific story, the villain and the victim communicated only through email, which is a red flag. There should have been some phone conversation. The victim requested that the villain send them a bank letter, and the bank happened to be an international bank, which is another red flag. The request should have gone directly to the bank, not to the villain, but it went to the villain. So the villain provided an obviously fraudulent bank letter confirming the bank account. But the victim who received the letter accepted it without any level of professional scrutiny. So let me process the payment. I'd love to tell you that there's a hero in this story, but unfortunately there isn't one. And the result was a sad ending, which was $325,000 going out to the fraudster that they couldn't recover.
And in the interest of time, I'll just go over these relatively quickly. Expense reimbursements and just expense reporting processes. I think most individuals or organizations have seen something related to this. People get creative, and I've seen an individual purchase a China set and put it through as a meal expense because it was written in Japanese and didn't think that somebody would be able to read the language. So again, people just get creative. Payrolls, making payroll issues, making sure that there's controls around new hires and changes to payroll. We had an organization, a very large retail pharmacy store that caught its managers in delaying the termination date for its employees in their system so they can take the last paycheck and cash it in currency exchanges, grocery stores, and they had a variety of different methods that they were cashing it. We talked about policies and procedures, but we didn't really talk about, we talked about the general policies and procedures, but at a higher level, it's also important to have a conflict of interest and a whistleblower policy and a whistleblower program. In fact, Steve and I are working on an investigation right now that came through a whistleblower where the whistleblower alleges that the organization has recognized revenue early and deferred expenses. And now the organization is having to hire us, Sikich, to evaluate that and make a determination as to whether that was actually occurring. But implementing controls, implementing policies and procedures, making sure that you have a third line of defense are important to be able to help capture these things. And I'll leave you with, as far as the final one on here, I want to talk about is IT. Most of what we talked about is on the finance side, but there are a lot of controls and issues that come out of IT. Steve mentioned cybersecurity, but in small IT departments, you can have a lot of responsibilities within a very few individuals, or some of those individuals may have what's called privileged user access, essentially giving them the keys to the kingdom. They can make any change within the system for any data without anyone being able to see it. One of my clients, actually, a very fast growing company, technology company, in their earnest to make sure that they are addressing questions from the business in a timely manner, they gave several of their IT individuals privileged user access. And nothing has happened, nothing that we've identified, but the ability, the opportunity is there for them to be able to do anything.
I've got a quick example. It's a private, religious-based secondary school. Controller goes on vacation. Because the controller goes on vacation, they grant access to an accounting staff person. The access includes the ability to set up a vendor, approve an invoice, and submitting payment for approval. The access is needed. Problem becomes controller returns from vacation, but the access never gets revoked. Nothing bad happened, thankfully, but it's something that we identified for them, and after being there for maybe 20 minutes or so. So I realize access is important, but monitoring that access is equally or more important.
So what can you do? What can you really do today? The theme of the day has been start with yourself. Set the tone at the top. Build up or update your lines of defense. Build up create your policies and procedures if you don't have any, or build them up and update them. Perform risk assessments, preferably annually, to be able to identify the risks that the organization faces. And then finally, don't forget about the third line of defense. Periodic independent assurance will ensure that the controls are designed appropriately and accurately. I want to thank everybody for their time.
Wait a minute, I got one more thing to add.
And whatever Steve is going to say.
You're done, I'm not. So if Superman and Batman were real, I submit to you that there would be no crime in Metropolis or Gotham City. Villains wouldn't be willing to commit crime if the Caped Crusader was roaming the streets or the Man of Steel was patrolling overhead. I mean, they'd be crazy, right? If it were real. But if there are no crimes in Metropolis or Gotham City, would Superman and Batman be any less of a hero? Are they heroes only because they catch crime, or could they also be heroes because just by their mere presence, crime is prevented? Crime doesn't happen. In your governance structure, your tone at the top, your risk management, your compliance function, your robust system of internal controls are the heroes in your story. The more effective they are, the less you'll notice them. And if you don't notice them at all, really, the bigger hero they are. So that's the end of my story. And as Sargon said, we'd like to thank you for joining us. We are right at the limit of our 60 minutes.
Yes, so thank you, Steve and Sargon. Appreciate your valuable insights on the topic today. There were some questions that came in that we didn't get a chance to answer, so we will make sure that we get answers out to you all here timely. And just a few reminders, at the conclusion, questionnaire survey will launch, so make sure you complete that, as that's required in order to receive the CPE credits for today. And then the certificates will be emailed out within 2 weeks. So this does conclude our discussion today. Again, don't hesitate to reach out to any of us with any further questions or conversation. And thank you for joining us. I hope you all have a wonderful day.
Thank you.
Thank you.